For you know how, like a father with his children, we exhorted each one of you and encouraged you and charged you to walk in a manner worthy of God, who calls you into his own kingdom and glory. 1 Thessalonians 2:11 and 12. Hi, I'm Rob West. With Father's Day approaching, we're asking a deeper question. What kind of legacy are we leaving as men, as dads, and as stewards of what God has entrusted to us? Jonathan Lewis from Fathers for Fathers is here to talk about that today. We're talking fatherhood, faith, and financial discipleship that shapes generations. Then on to your calls at 800-525-7000. This is Faith and Finance Live, biblical wisdom for your financial journey. Well, I'm delighted to have my friend Jonathan Lewis with us today. He's president of Eastport Financial Group and the founder of Fathers for Fathers. He's a great friend. Fathers for Fathers is a faith-based organization that restores hope, healing, and purpose in the lives of men, especially fathers. Jonathan, great to have you here.
It's great to be here, Rob.
We've been talking about this for a long time.
Yeah, I like your studio, man. You know it.
I'm glad that you're on the other end of the mic today, and I'm even more excited about our topic, especially with Father's Day just around the corner. So I want to back up, and why don't we start by just giving you a chance to share a bit about your story and how God used that story to ultimately allow you to launch the ministry.
Yeah, I mean, Revelation 12:11 says they'll know us by the blood of the Lamb and our testimony. And so, 34 years ago, if you told a 15-year-old kid when he dragged his dead dad to a beach in the North Atlantic in Nova Scotia that God would, 34 years later, take that story and all the brokenness that ensued in the wake of that and turn it into such a victory story with Fathers for Fathers, that 15-year-old kid wouldn't have believed you and probably wouldn't have cared because I was so broken up over the loss of my dad and the guilt that I carried onto that beach that day that I had not successfully been able to save him. And there was a lot of wreckage in the wake of those years, Rob. I couch surfed, slept in my car, bounced around. Somehow, by the grace of God, did not end up in some kind of an institution other than the Canadian Armed Forces. That was the institution I ended up in, and that probably saved me and taught me discipline. And fast forward to today, and all those war wounds and scars have given me a tremendous energy to go after men and to really dig deep with them, not take a passive victim mindset answer as a brush off. And my wife would say, Jonathan is like a hot knife through butter when it comes to broken men. And I know it's because of the Holy Spirit and just the fact that I love these guys and I can see them for what they are.
What does success look like, Jonathan, for dads that are listening today, that they want to be successful, but it's more than that. They really want to be a faithful father?
Well, first of all, your story's not done. If you're still breathing, and for some guys, they might be questioning whether they even want to do that. I can remember a period of my life where I was so low that the pain was so deep, I thought the only way to stop the pain was to end my life. And so for the guys listening, if you're out there and you're really struggling with, I don't know how to do this, I don't know how to be a dad, I don't even know how to get the energy to want to live my life or go to work, you can do it, but you can't do it alone. That's the hard rub here, guys. We are wired to want to withdraw and try and do it on our own. 84% of men, Rob, out there would say they don't have one guy to talk to. Did you know that stat?
No.
That is disturbing.
Yeah.
And so you're not alone, but you need to reach out. You need to try and find guys. And for the guys that have an element of their footing, and maybe you've grown up in the church, or maybe you have good groups that you're part of, I would encourage you to look for these guys. They're not hard to spot. And don't take the first 12 no's as a brush off. Lean in on them. They want to be pursued. They're just broken.
Well, we're going to continue to unpack this. There's a lot to talk about today. What does that faithful father role look like? What if you're carrying shame and regret? Where do you go from here? What if you feel like you've missed your chance? And then let's press into the stewardship aspect of it. What does it look like to really articulate and model biblical financial stewardship, and that certainly includes financial stewardship, but it goes beyond that into how we model values and priorities and trust in God. We're talking with Jonathan Lewis today. He's the president of Eastport Financial Group, but he's also the founder of Fathers for Fathers. If you want to learn more, just head to their website, fathersforfathers.org. Again, fathersforfathers.org. We'll be back much more right around the corner as we think about Father's Day coming up on Sunday. We'll be right back. So glad to have you with us today on Faith and Finance Live. I'm Rob West. With me today, my friend Jonathan Lewis. He's the founder of Fathers for Fathers, a faith-based organization that restores hope, healing, and purpose in the lives of men, especially fathers. And Jonathan, with Father's Day right around the corner, obviously this is something on the minds and the hearts of a lot of our listeners. And you mentioned something before the break. You said many men carry silent shame or regret as it relates to their role as fathers. How do you encourage dads who feel like they've failed or maybe they've missed their chance?
Well, the funny thing is I always remind them that their story's not over. In our immersive study we're working on, especially for our American audience, football is always a good analogy. And we basically say to guys, hey, the day you were born onto a football field. And you can't get off the field. You can't leave the game. You got to play. And the question is which team you're going to play for. And the terrible rub is you're born playing for the other team, the wrong team. Let's call it the red and black team. But there's this invitation to come over and play for the winning team. And I think often guys suffer from passivity and victimhood, and we just get caught in our own internal dialogue where we beat ourselves down and we start rehearsing our failures. And it's amazing how we can spend all our time in our own depreciation room, literally beating ourselves up instead of actually recognizing a lot of God-given strengths that God's given us. And so it's never too late to peel off the jersey and say, I want to play for the other team. It does require contrition, Rob. It requires acknowledging that you've made some mistakes, and it requires a substitute. Someone has to be willing to put on that jersey for you. And thankfully, Jesus Christ already said, I already did that. You just got to accept the offer. And so the challenge is to get in the game. And get in the game on the right side of the field.
And often that involves starting small, taking that next step.
Yes.
You talk about restoring purpose and responsibility. What's a small step a father can take today who's hearing you talk and saying, I want that, to live more intentionally?
All right. Well, I'm going to pick on the guys that fit my profile. So I'm a divorced dad. In the U.S. alone, there's 24 million men who are not in their kids' lives. So and it is painful. I've talked to thousands of men who are not actively engaged in their kids' lives. And you know what the common theme is, Rob? They want to be.
Yeah.
They don't want to be an absent dad. And they will start telling you all the reasons why they can't be there, or they've messed up, or there's just no way. And what I can say emphatically, and I have faced this, God will honor you when you honor him. And the Apostle Paul wrote a letter to Timothy. He said, you're less than a believer who doesn't provide for your own family. So, for example, there's some hard truths here. If you're a dad who's not in your kids' lives, but you also haven't been supporting their mom, start, right? Own it. If you are a man who has battled with some sin in your life and you've kept it secret, don't do it anymore. Find a guy who's a mentor who loves you and get clear and confess that sin to him. It's hard. It's hard because here's the problem, and this is why you don't want to do it, because then you have to do something after that, and it's called be accountable and change. So you have to want to get in the fight, get in the game. But we can't keep going like this. If you look at the downstream of all the issues that are going on in our society, you could pretty much trace them all back to the pandemic, and I call it a pandemic of fatherlessness. Yeah. And so, guys, my plea, this whole ministry is about encouraging you, not beating you up, but encouraging you to get the gloves on and get in the game. And if you're out, get back in. right? Brush yourself off. My dad, when I was growing up, he used to say, "You're fine. Rub some dirt in it," which we all know is a way to stop the bleeding. There's a bit of truth there. You're fine. Rub some dirt in it. But get yourself around guys that are spiritually mature, and they'll encourage you. But you got to be willing to be accountable.
Yeah. Boy, that's so good. Let's combine this with your day job. I mentioned at the outset of the program that you are the president of Eastport Financial Group. So you counsel families entrusted with much to hold it loosely and to see that as a part of their role as a steward of God's resources, to give it generously, to invest it strategically. Combine that with this role of being intentional as a dad. What does that look like to really model financial stewardship in your legacy?
Yeah, I mean, to me, stewardship is all one and the same. So whether you're being generous with money and not generous with love, or generous with your spirit, generous with your time, then you're missing the point. And so, people always hear me talk about Ephesians 5:26. Paul's imploring men and women to be mutually submitted to each other. And, he says to the men, "Love your wives as Christ loved the church, being prepared to present her on the day of judgment." And guys will always say, "Oh, yeah, well, no, I love my wife. And if there was a proverbial bullet, I would take it for her." It's like, no, that's not what he's talking about, though. Jesus died for the church. He wants you to die to your flesh. So if you really want to be a man of God who's going to steward everything he's entrusted you with, well, it starts with your wife first, right? Or the mother of your children. But one way or the other, you gotta steward that. And the way you steward is dying to your flesh. I talked to a bunch of guys in a men's retreat last weekend about the appreciation room and the depreciation room of our wives. Board up the depreciation room, write the list down, light it on fire, and you should only be spending time in the appreciation room for that woman. And then from there, the stewardship trickles down. Make sure you're managing your finances well for your family. Make sure you're living up to the expectations. Go to work. Right? Paul said work is good. I hate to say it, but the Apostle Paul said if you don't work, you don't eat. I actually agree with that. Yeah. So it's about stepping up and stewarding everything God's entrusted us with.
That's so good. I'd love for you, we're about out of time here today, but I'd love for you to pray for the dads that are listening right now on the radio. Some of them discouraged. Some feel like they have failed. Others feel like they're getting it done, but there's more. And I'd love for you just to pray a blessing over them as we prepare for Father's Day this weekend.
Thanks, man. Heavenly Father, there's always some guy out there that this is meant for. He probably doesn't listen to this channel and he's just tuned into it or whatever. And here he finds himself with some crazy guy from northeastern Canada praying for him right now. And Lord, I just pray that your Holy Spirit through me would touch his heart. I pray that you would challenge him in what you would like to see him do, how he would step up. Only he knows that right now, Lord, whether it's in the area of fatherhood or his finances or, I don't know, Lord, he could be having wandering eyes and you're convicting him right now. I pray that he would really cry out to you, and I know you'll meet him. You say that. I pray Romans 8 over the men listening to this. The very end of that chapter, Paul says, "What can separate us from you, Lord?" And he goes on to say, "Nothing. Nothing can separate us." And so, Lord, draw these men in. Let them know that even their sin does not separate them from your love. And I pray that they would just bring that in and they would recognize that Jesus Christ was sent by you on the greatest rescue mission of all time. Yes. And what's scandalous, Lord, is you would have sent Jesus if it was just one guy.
Wow.
That's scandalous grace, Lord. And I thank you that you sent him for all of us. Amen.
Amen. Jonathan, grateful for you. Happy Father's Day, my friend.
Thank you.
That's Jonathan Lewis. He's with Fathers for Fathers. If you want to learn more, head to their website, fathersforfathers.org. Again, that's fathersforfathers.org. A lot of resources there that you can take advantage of. I hope you'll heed that counsel and be encouraged today as we prepare for Father's Day just a couple of days down the road. A quick break and back with your questions after this. 800-525-7000. That's 800-525-7000. I'm Rob West, and this is Faith and Finance Live. We'll be right back.
The opinions offered during this program represent the personal or professional opinions of the participants, given for informational purposes only. Any information provided is not intended to replace advice from a financial, medical, legal, or other professional who understands your specific situation.
Great to have you with us today on Faith and Finance Live. I'm Rob West. Well, we're just going to begin taking your calls and questions here in just a moment. That number to call and get in on the conversation today is 800-525-7000. Again, that's 800-525-7000. You can call right now. In the news today, many homeowners built significant equity during the housing boom of the early 2020s, and many are now tapping into it. According to International Exchange, homeowners withdrew about $47 billion in home equity during the first quarter of 2026 alone. That's the highest first quarter level since 2021. Most withdrawals came through HELOCs, home equity lines of credit, and home equity loans, allowing borrowers to keep low-rate mortgages that they had from 2020 to 2022 while accessing cash. Keep in mind, and you understand this if you've been in this situation, if you had one of those low-rate, like high 2% mortgages or 3 to the mid-3s, you certainly don't want to undo that with refinancing to cash out. So what folks will do is leave that in place, add the home equity line of credit on top. Now, with today's mortgage rates much higher, those second liens are more appealing because it allows you to keep the first one in place and still access those funds. Still, the home equity is not free money. Borrowing against your home adds debt, interest costs, and risk since the home serves as collateral. Experts say homeowners should use equity only for financially sound purposes. We're talking about necessary repairs or improvements, not vacations or lifestyle spending, or even consolidating higher interest debt, which may seem plausible at face value. I mean, why wouldn't you replace 22% debt with 7? Well, the reason is one's unsecured, one's secured by your home. Also, when you lower the interest rate, the pressure comes off. My experience is you don't do the hard work to curb the problem that got you into the debt in the first place. Make sure before you borrow, for sure, the payments fit comfortably within your budget. But beyond that you're not robbing God an opportunity to provide, that you're in spousal agreement, that you're not borrowing for things that are depreciating. Make sure, again, it's for a productive purpose. Here's the rule. The economic cost should be less than the economic gain. And so we want to make sure that it's productive. So think about borrowing for, again, a home improvement on a house, an appreciating asset, not for lifestyle spending or a car where you've got a depreciating asset or one that depreciates entirely as soon as you buy it. So hopefully that's helpful. Just a good reminder for all of us today. All right, let's dive into your questions. 800-525-7000. Let's begin in Cleveland. Patty, go ahead.
Hi, thank you for taking my call. Our 35-year-old daughter lives with us, and she has had extended health issues and unfortunately lost her job. And we don't know when she's going to be able to return to work. To pay for her expenses, she's tapped out her savings and felt she had no other choice but to access her retirement. And there's a 10% penalty for that. And at the Fidelity brokerage, they said there may be a hardship exclusion or an opportunity to adjust or eliminate that 10%, but they didn't know how to access that or how to even look into it.
Yeah. I wouldn't assume that the penalty applies here, but I also wouldn't assume that it's automatically waived. The answer depends on the type of retirement account and her medical condition, as well as how the money was used. So let's start there. You said she's 35. What type of retirement account did she withdraw it from?
It was with her employer, which she was terminated because of her health issues. And so she just, like in the last 2 weeks, moved it into Fidelity. They offered her 2 or 3 different opportunities for investing the money. One, herself. She's a healthcare provider, so that's not her wheel of knowledge. So she did not want to do that. They said, for a fee, you can have that completely managed. And then for a less amount of a fee. You can have a time-managed account where they calculate your year of retirement and try to invest based on the risks of that time frame. And that felt like a middle-of-the-road option, which she did choose, at least for the time being.
Yeah. Okay, that's helpful. So it's probably in an IRA now. I mean, the challenge is the IRS exceptions to the 10% early withdrawal penalty. And by the way, you're always going to have to pay the tax. The question is just around the extra 10% penalty. But the exceptions around waiving that are around, number one, total and permanent disability. So this is fairly strict, and it as a standard. Being on medical leave alone doesn't automatically qualify you. They say you cannot engage in any substantial gainful activity because of a physical or mental condition that is expected to result in death or be of long, continued, and indefinite duration. So permanent and total. Second, unreimbursed medical expenses. For IRAs, the penalty may be waived on withdrawals used to pay qualifying unreimbursed medical expenses above the IRS threshold. So you would need to check that. And then there's also one around paying health insurance premiums while you're unemployed and certain requirements are met. So I think really what you need to do is check with a CPA, perhaps whoever does your return, just to see what options might exist and whether she has a qualifying event based on one of these three exceptions. There are a few other exceptions as well, but they're commonly around a qualifying disability. I appreciate your call, Patty. I'd talk to a CPA. We'll be right back. Great to have you with us today on Faith and Finance Live. Coming up in our final segment today, Jerry Boyer stops by. We'll get Jerry's take on the markets. S&P 500 closing higher, the NASDAQ climbing nearly 2% on the backs of some real momentum in the chips, the chip sector. Also, the Dow Jones closing higher by 72 points today. Oil tanker traffic in the Strait of Hormuz jumps after the deal was put in place between the U.S. and Iran to open the sea lane. We'll get Jerry's take on what's moving the markets today, specifically his analysis on Kevin Warsh joining the Fed, as well as what the latest is in the area of corporate engagement. We'll also be taking your questions today. Still got room for you. If you have a question, something happening in your financial life, we'd love to know about it. That number, 800-525-7000. We'd love to try to help you wrestle through it through the lens of biblical wisdom. 800-525-7000. You can call right now. Let's go to New Jersey. Jody's listening on the app. Go ahead.
Hi. Thank you for taking my call.
Of course.
Okay, so recently I had made a living trust online thing, and I live in an apartment in a co-op, so I have a share certificate, not a deed or title deed, as an owner of a home, and I co-own it with my daughter who is single. So I have this checklist about what to do after a living trust, and it says that I have to confirm that all assets are properly titled in the name of the living trust. So I did check with my co-op office, but they have no clue how to help me. They said I didn't have to do anything. So I just need your expertise in what do I do next. Do I need to change the share certificate and retitle it to the trust and record it with the county recorder and things like that? Can you guide me on that?
Yes. Yeah, depending on the co-op, that should come from the co-op corporation itself. It could be a property management company or the co-op's attorney. So I would ask for a copy of the current share certificate. You may already have that. I would ask who serves as the corporate secretary or keeps the shareholder ledger. And then you could also contact the co-op's attorney if the management is unsure. But essentially what has to happen there is that, the co-op, would they would review the trust documents, provide the transfer paperwork, and then they would issue a new share certificate in the name of the trust. Now, some co-ops have specific approval procedures, so don't assume you can just simply endorse the existing certificate. But you just want to let them know I've created a revocable trust, and I would like to transfer your ownership interest into that trust. And if they don't know how to do that, and the secretary of the board doesn't know how to do that, then they can get you in touch with their attorney, and they can review the transfer process. Okay?
Okay, so it is a mandatory thing, right? In order to retitle it, right, to the trust.
It has to be retitled in the name of the trust. Yes, absolutely.
Okay, so that's
now
thing.
it's also going to come back down to the bylaws. Many co-ops do allow transfers to a revocable trust. Some require board approval. Some have specific trust transfer procedures. Some restrict it altogether unless certain conditions are met. So I think that's where you need to go to the board or the management company and ask for their policy. This should be fairly common for them. Maybe you just got to the wrong person, but ask for their policy on transferring shares into a revocable trust. And then they should give you the process by which to do that. Now, you also asked about a bank account, and yes, that would be important as well. If your goal is to avoid probate, then you're going to want to fund the trust by retitling appropriate assets into the trust. So for a bank account, that means taking a copy of the trust to the bank, opening a trust account, or retitling the existing account in the name of the trust. Now, not every asset needs to be in it. For instance, investment accounts are often handled through a beneficiary rather than retitling, but a bank account typically would be, needing to be in the name of the trust.
I see. So these two things for the share certificate and also bank account needs to be retitled.
Yes, ma'am. They sure do. And I wouldn't accept no for an answer. I'd keep working until you get to the right person that can give you the bylaws as it relates to the trust and what the process is. But they should be able to issue a new share certificate in the name of the trust.
Okay. So the co-op that I live in, as I mentioned, it has my daughter's name as well, who is single. So which ultimately, obviously, I'm going to, leave it for my two girls. So is it advisable to let the trust not have her name this time so that when I pass on and, she will not lose on the tax later if we sell it, if she sells it?
So you and your daughter are joint owners of the property?
Yeah, I'm a widow, so she's single, and so we are two joint owners of the property, of the co-op apartment where I'm.
Yeah, you're not going to be able to place your daughter's ownership interest into your trust because it belongs to her, not you. And so essentially what would need to happen is, if your daughter wants to transfer that back to you, because that was the intention all along, then she would gift her portion to you. So you're the sole owner. And then at that point, it could be transferred back into the trust.
I see. So there are two things to do. First is for her to gift it to me. And then after that, for me to retitle it in the name of the trust.
Yeah. I think the co-op, would need to approve the transfer. And so, it may require approval before ownership can be transferred from her back to you solely. And there's going to be estate considerations to this as well. So you're going to want to talk to a CPA because anytime ownership is transferred between family members, then you've got to consider the estate planning consequences. Now, the estate lifetime gift exclusion is $15 million. So you should be fine, but you're just going to need to report it properly to the IRS, and your CPA could help you with that. And then once it's back into your name solely, now we can proceed with getting it retitled in the name of the trust. And now when she inherits it, she gets a step up in basis on the capital gains, which is really going to be helpful for her. Okay?
I see. Okay, I got it. Okay. So
thank you,
so
Jody.
much
Unfortunately, I'm out of time, but I appreciate it. Absolutely happy to do it. God bless you. Have a great weekend. We're going to take a quick break. When we come back, Jerry Boyer is going to stop by. We'll get his take on the markets. We'll also take a few phone calls as well. We'll talk to Karen and Susan right after this. Stay with us. Thanks for joining us today on Faith and Finance Live. I'm Rob West. We're taking your calls and questions today, 800-525-7000. That's 800-525-7000. Hey, by the way, if you'd like to support the ministry, we're headed quickly toward our year end, June the 30th, which is the end of our fiscal year here at FaithFi. So this is an important time of year for us to finish strong. If you love the ministry, you'd like to help us reach more people and continue sharing this message of managing God's money God's way, I'd invite you to become a partner. Partners give $35 a month or $400 a year. And as a way of saying thanks and equipping you to live as a faithful steward, we'll send you 4 issues of our magazine, all of our studies and devotionals, pro access to the FaithFi app as well. Just head to faithfi.com/give. That's faithfi.com/give. All right, before we head back to the phones, Jerry Boyer is here. Jerry, a lot going on in the markets today. We'll get to that here in a moment. But first, corporate engagement. You know, we shared with our listeners several months ago just some of the positive news from Apple based on your work in the area of corporate engagement. Remind us of that and then tell us what is new this week.
Yeah, well, I mean, what happened is it took a couple of years of talking to Apple, maybe more than a couple, maybe 3 years of talking to Apple about a number of issues. And one of them was their policy when it came to CSAM, which is child sex abuse material detection software. And the situation with Apple was that it would block someone from sending an indecent photograph or image to someone who was a child. But then when they turn 14, that clicks off. By the way, Google, so we talked to them. They said, well, there's privacy concerns, et cetera. And we said, well, it's illegal to send dirty pictures to a 14-year-old, just like it's illegal to send dirty pictures to a 13-year-old. So, and they came back the following year and they said, we've turned it on. It goes until someone's an adult. And we're also making it so that minors do not have access to explicit material apps on the App Store. So that was a wonderful thing that happened. And then just this week, Apple announced that it's going to have strong child safeguards of a similar nature when it comes to Siri, which is its AI package. And I think this is really important because Apple's been criticized because they haven't rolled out AI as aggressively as other companies. But some of the other companies have been getting into trouble because of deep fake material. It's illegal to have explicit material about an actual minor who's like a real person in the world. But it's not so clear if that's not an actual person, if it's like a synthetic. I don't want to get into too much detail here. So we had to deal with a lot of companies. We talked to them, and we made some progress with some of the other companies. And Apple seems to be taking this very seriously. So that is absolutely to their credit.
Wow, that's incredible, Jerry. Glad to hear it, and well done. I'll tell you, it's just an example of the power of corporate engagement as you engage in a rational and thoughtful way. We're seeing more and more of these companies do the right thing, and that's the way it should be. All right, let's turn to the... Go ahead.
And they don't often hear from people dealing in a rational or thoughtful way. Whether, whatever side they're hearing from, there's a lot of screaming memes out there. And just to come in and just be a normal person and say, look, this is an issue. We think you want to do the right thing. You're a great company. We never come in with the company as an enemy. Apple's a tremendously innovative company. These iPhones, the computer technology has changed the world. And I know there's some problems, and maybe we take too many selfies or spend too much time on our phone. But on balance, I will take the blessings of that technology. But And I think that's how Christians should think about technology, whether it's the internet or whatever, or AI. Thank God for the new blessing, and then make sure it doesn't become a curse, rather than treat every technological advancement as probably a bad thing, probably a curse. Let's all grumble about it, and maybe you can get some good out of it. I don't think that's the right way to receive anything. Receive good things with thankfulness, but then say, yes, but how could it be used in a bad way? And then put guardrails around that. So mostly good with guardrails rather than always guardrails and not talking about the good of it. By approaching Apple and other technology companies with that attitude, we've been able to make a real progress, because we're not saying we don't like the company. We're saying that we like the company. Our clients are invested in the company, but, right? Yes. And then we talk about the areas where they could be even better, rather than coming in all judgmental.
Yeah, that's well said. Jerry, a lot going on in the markets, obviously some momentum on the heels of that deal, so to speak, the memorandum of understanding. Some questions about whether those peace talks are going to continue in Geneva over the weekend. But regardless, the other point making news today, or not today, but in the last week, is the first Fed meeting with the new Fed chair. What do you make of all that?
Well, I like the new Fed chair, Kevin Warsh. I don't know him, but I know a lot of people who know him. And he seems to be someone who understands the basic principles of supply-side economics and sound money. So honestly, when the president nominated him, I was thrilled by that and a little surprised. I thought he might say, "Oh, hey, my housekeeper would be good at this," and and just put someone who's totally loyal. And he put someone there who has his own ideas. I think that the job of a Fed chairman is not to manage the economy, and it's not to manage the markets, and it's not to do whatever the president says. It is to maintain the purchasing power of the dollar for our benefit, for the benefit of the people who are users of dollars. So as Americans, we use the dollar. Some people overseas do, but mainly it's us. And his or her obligation is basically to not steal. I mean, to have just weights and measures, to put it in biblical terms. And what happens is presidents almost always want easy money because it gooses the economy and it helps them get reelected or helps them in the midterms. Well, I think the big test for Kevin Warsh this week was, is he just going to be a puppet of the president for cheap money populism, or is he going to go for the soundness of the dollar? And we had the meeting, and to me it was a great sign. After the meeting, the dollar went up in value rather than down, and gold, which is a hedge against disaster, went down in price rather than up. And I think Bitcoin's down for the week as well. So the disaster hedges went down, and our currency went up in value against global currencies. To me, that's a good outcome. And here's the thing. We had an up market anyway, even without the promise of the Fed goosing the markets. So yes. I'd say Kevin Warsh has had his first test, and he passed with flying colors.
All right, we'll take it. Jerry, appreciate you as always, sir. Happy Father's Day.
And you. Oh, and to you as well.
Thank you. God bless you, buddy. That's Jerry Boyer. He's our resident economist, joins us each Friday on the broadcast. All right, back to the phones. We'll get to as many calls as we can. Out to Wisconsin. Karen, go ahead.
Hey, Rob. I just had a quick question. My husband's with a new employer, and they are offering a 12% match for the 401, up to a 12% match on his income, but that doesn't kick in for a year. He is 62. I am 60. I've heard quite a bit about, at our age, not going as strongly into a 401k and doing more like Roth because of the conversion later on hitting hard. Could you elaborate on that?
Yeah, absolutely. I mean, I think there's something to be said about having both buckets to pull from in retirement, the Roth bucket and the pre-tax traditional bucket. And that allows you, depending on where tax rates go, which is going to be an unknown, to be able to pick and choose based on what makes the most sense. Also, anything you get into the Roth is not going to be subject to the required minimum, which, by keeping that lower and having more in the Roth bucket means if you don't need it, you could leave it there and not have to pull it out. And that could result in, pushing up your Medicare premiums. And so I think this year, while you're waiting to qualify for that very generous match of up to 12% for his employer, I think this is a great opportunity to max out the Roth IRA for both you and your husband. Now, if you get to the place where you've put in the full amount for the year, $8,600 if you're 50 or older, and you have more to do, well, then go ahead and start putting it into the 401k. But I would fill up the Roth first.
Got it. And then down the road, what are the implications as far as like the conversion, the 401 conversion? Is there?
Yeah. Yeah, I mean, so you would be able to you would be able to convert anything in the traditional IRA or 401k, which you'd probably roll to an IRA, over to a Roth. And what most people do is fill up the tax brackets. And so, ideally you'd be in the 12% bracket, and you'd say, okay, every year between, retirement age when we're no longer working and 73 when we have to take required minimums, we would take any amount that's left in that tax bracket worth of income and go ahead and convert it without going over. Or maybe you're comfortable with the 22% tax bracket, which is still relatively low, and you could work with your CPA to say how much additional taxable income could we have this year without tripping into the next bracket beyond 22, and go ahead and convert that amount. And if you do that every year, you would systematically begin moving it over. So long as you had money outside of the retirement account to pay the tax, you'd be doing it at a relatively low tax rate. You would not have to take it later if you didn't need it, which again could keep the IRMA in check. And then if you ultimately pass some of it down, the tax would already be paid on that portion for your heirs, and they may be receiving it in the peak of their earning years, which would mean it could be pretty costly for them to have to pay tax on it. So that kind of filling up the tax bracket strategy can work very well between retirement and full and required minimum age.
Okay, got it. So then we should not be converting anything from 401 now from his previous employer.
No, because he's still working, and so you would be potentially converting it at a higher rate than you might be able to do later when he's no longer working and you're in a lower bracket.
Got it. Okay, I appreciate the info.
Absolutely. Karen, thanks for calling today. Call anytime. Have a great weekend. Well, listen, folks, that's going to do it for us. We're so thankful to have you along with us today. Let me say thanks to my team today, Lisa, Tahira, Taylor, Omar, and everybody here at Faith Fi that makes this possible. Faith and Finance Live is a partnership between Moody Radio and Faith Fi. Hey, if you'd like to support us before June 30th here at Faith Fi, go to faithfi.com/give. Have a great Father's Day weekend. We'll see you next week. Bye-bye.